welcome back again. With me on the studio today is the MD of Trade Line Limited. And we're going to look at the stock market together. And we're starting by looking at what the market did yesterday, and at the same time, the earnings that were released to the market, and what also happened during the first quarter of 2021. These are more we're going to discuss on the stock market segment. And I will start by saying the market opened to the All-Share Index, opened the year or the quarter with 49,270.72 and closed the quarter, which is 31st March, which was yesterday, at 39,045.13, meaning that for the year to date or for the quarter, the market lost 3.04. And this to show you that activity within the market. And I'll ask what are responsible for this market movement. Don't forget that during the first month of the quarter, the market gained almost 5.6%. But now the market is closing down. What is responsible?
Thank you, Ambrose. The market opened the year on a very bullish note, where we see the market gaining so powerfully. And I remember we had a very sharp trend that moved to the top. And I was saying that this trend is very sharp. And whenever we have a trend like this, there's likely to be a powerful correction. But again, when we enter the month of March, being the earnings month, we begin to see a very heavy correction, because part of the things that help the market in the first 2 months is the fact that fixed income market rates went down, and the government itself is trying to encourage investment so as to bring the nations out of recession, thank you. And so that was why we had a lot of activities surrounding the capital market in the first 2 months of the year. And so when we get to March, we begin to see a correction, which was very heavy and scary, I must say, because market began to drop heavily. But suddenly, the earnings began to come in. And of course, I remember we saw earnings from UBA. And when UBA released their earnings, market got very angry the more, because the dividend was below their expectation. Of course, we saw a lot of negative reaction, and people begin to get scared. If you watch my report then, I was even saying that is it possible that the earnings will be able to recover the market for the ongoing correction. But suddenly we begin to see good earnings. And in fact, this morning, you realize that the market is very active and very happy too. So we are seeing a positive movement as we speak.
Yeah, actually, that means we say that the first quarter was a missed market.
Yeah.
Then for the earnings that have that hit the market this period of the first quarter of 2021, I would say, as an analyst and at the same time a player in the market, which sector do you say that has performed extremely well in terms of earnings? I'm not talking in terms of price, because we're going to price later, but in terms of earnings, because it's part of what we discussed on this program. Which company or which sector will you say their earnings that?
To me, we have two, like in your words, we have two odds sectors.
Yes.
The number one is the banking sector.
Yes.
While the number two is the healthcare sector. Those are the two sectors that is gaining the focus of both the government and the investor at large. So the two sectors are the most active sectors as we speak. I'm not saying others are actually not performing, but those are the major focus. Then you can look at the insurance. A lot of things going on in the insurance sector, but the confidence in the insurance sector cannot be fully guaranteed, except in few of them, when we talk about AICO and few others that are active in the sector. Yes,
yeah, actually, you just said it all. But before we go into the earnings, we want to look at the top gainers for the quarter. Now, look at that top gainer for the quarter. We're looking at stock like what's it called? ABC topping the chart. Then what are the factors responsible for that stock to top the chart?
Market expectation, the result they brought in is also responsible. Then you look at the liquidity, the price. Everything comes together, contributed to the movement. But if you ask me, I don't trade a stock like that. ABC, I don't trade a stock.
Actually, if you look at the top 5 gainers from the top gainers of the chart for the quarter, I will tell you those are inactive stocks. And also, it shows that the volumes of those stocks, for me, is just market sentiment and market forces. In terms of fundamentals, those companies topping the gainers don't have such especially stuff like Morrison, industry. When I see that topping it now, I'll become afraid. But for investors, knowing that, as you have mentioned, the healthcare sector, also Morrison also is one of them. Is doing well. On that note, we look at also the losers for the quarter. And I see that the losers of the quarter, I will say that I will see that more also will have a low cap stocks and a few those medium start up among the top losers. What also the password responsible for that?
Like you have said, most of them are market forces, and some little reaction. If you look at gain and losers chart generally, you see that most of the stock aligned in that place. At one point of the time, within the first quarter of the year, they have some negative fundamentals which investors actually reacted to. And that's why you find them where they are today. And of course, I believe that what we judge most of those equities is the earnings that has been rushing in. In fact, from yesterday, it's been awesome.
And also, I observed that between this period of the Q1, the investment environment is changing and momentum is also changing. Are we expecting that this changing momentum will continue in Q2 or the first month in Q2? No, we are cutting already in April today now. Then this loose momentum we are seeing and also changing environment in the market, is it what we expect going to the
like we have seen right now? You see that things are already changing even from this morning. You see that the market is actually responding well. And of course, the full year earnings is a full assurance that some of these stocks, I'm going to ask, what happened? Some of these stocks are actually insulated. Or what kind of English do I use? Because you see that even despite the recession, despite the challenges, you see companies posting very good returns. You can see the result of May and Baker, for example. I want to say it's the best for now, and I've received a lot of calls on May and Baker, and people are actually talking about this stock today because they have actually dazed investors with their performance.
Yeah, actually, you started the earnings, but let me just put one thing before we go. You said something that really touched me now, that the companies on Nigerian stock exchange or in economy, despite the recession, they were all resilient because our managers have become better managers.
Yes.
And also, factoring where we are coming from, we're already seeing a positive number, even when we had a bad economy. Then we're not going into recovery.
When we have even recovered from recession.
Yes, we are going to recovery because from the last data that came from the Bureau of Statistics, that already having about 0.11 growth for the last quarter of 2020. That means, since personally I assume that nothing has changed within that December 31st to March 31st. Likely we're going to see sustained growth. And also, if you look at what the World Bank just released yesterday, they reviewed the outlook for our growth from a negative 5.3 to almost a positive 3.4 for Nigeria and another African country. It tells you that they are seeing potential that will support our economy. And that means you as an investor will say that capital market is a leading indicator. Now that we're expecting the first quarter earnings to start coming to the market and from this month, even from now, it's going to give us an insight if we're going to see a sustained growth. Because I tell you that if you want to assess what the company is doing or the economy is doing, look at the listed company or the exchange. It tell you what is happening in the economy. If we're expecting them to maintain that positive trend, as we're expecting the Q1 number to give us an insight what we should expect in terms of economic recovery, in terms of momentum, and in terms of what investment decision and pattern to go along with.
And again, if you look at the first quarter itself, let's see the things that actually happened. You realize that situation with which the companies have been run in the first quarter of 2021 is fairer than what we saw even in the last quarter of 2020. Things are better. We have seen the vaccine coming up. People are already taking it. The fear of COVID is going down, and the pressure. There are more activities. People are now going out. Business are being carried out in the normal way. So, if you ask me, I will tell you that I'm expecting a very robust first quarter earnings compared to 2020.
Thank you very much. I think that is why I tagged this year vaccine year. That is vaccine year that will drive the recovery. And also, globally, we are seeing that panicking has reduced.
Yes.
And also, people are planning that also drive the price of crude oil. Because if there's no lockdown here and there, consumption will be there, there will be activities in terms of manufacturing where this oil will be needed for something good. For me, this is a good way to start the second quarter. And also, I want to look at the number that were released. I will start from the me and Baker you just mentioned. Me and Baker had a 16.21 growth in their top line, which I mean their revenue or their sales. And their PAT, which is the earnings, were 34. And I'll tell you by all standard, even investor standard, because we have data for this company has met all we need in terms of top line and the bottom line.
Your top line is 15%.
15 plus. And also, now, the next one, when you say people are calling you, I'm really yet, but they have seen the number that is. Not only that, they paid investors 25 kobo dividend in 2019. Now they've jacked it up, with 5 kobo to 30 kobo dividend. And this.
There's still a special dividend.
No, this for me and Baker.
Okay, me and Baker, sorry, yeah. So, we, like I said the other time, we are seeing the effects of all that happened during the COVID. These are the sector that enjoyed a lot of backup from government. There are so many policies that favor them. In this sector, I think it's only GlaxoSmithKline that released a negative, not even negative, a lower performance. It's a decline. So all of them performed very well because they have a lot of opportunities in the year 2020. And I believe the opportunities have not been taken from them. So this is where to look at
for this year.
For this year.
Okay, I would say it's UACN writing their story because they don't release their full year results to the market, and they grew their revenue also by almost 2.72%. But the good thing is that they turn from a negative position to a positive position, from a loss of almost 9 billion in 2019 to earnings of 3.9 billion in 2020. Not only that, a negative 3.21 EPS to a positive 1.3 EPS. And within this period, they declared a dividend of 1 naira 20 kobo against 10 kobo in 2019.
Maybe we should start from how they got to this place.
Good.
You know that the management of UACN took a very important decision by exiting from the property business.
Exactly.
Which is what has been hitting them down.
Okay.
And the moment they exited that business, we begin to see a better performance. And here we are today. They have come out of the negative position. And we are even seeing a special dividend. Paying 1 naira 20 kobo is an outstanding, maybe there's a better way to classify it. It's an outstanding performance.
Yeah, actually, like I said, they are writing their story. Before now, investor confidence in UAC has already started shaking because they promised that they're going to give kind of bonus share from their UAC property to those that are buying it. And then along the run, they delayed. And that, the price moved from almost 7 naira to around 9 naira. It came down back to that 7 naira because of what? Because investors were not happy with the management. But now, with this coming up now, I think they are writing their story, which is good. For me, this is an outstanding performance in terms of payout. And also coming back from a negative position to positive, for me, is good thing for UACN. Then the next one there is...
I think we should talk about the risks and the allocation of shares.
Okay, the bonus... okay. Yeah. Good, yeah. For those that have UACN, then in your 1 million, say 1 million units for what? For 260 risks. When I mean risks, UACN property risks. When I mean reinvestment trust. That they will give you for 1 million, for 1,000 units you have, they give you what? 260 units of the risk. That is also a plus for those that are in UACN. Yes. Then we're also looking at a GSK full year. Like my colleague has just said, that it's the only company in that sector that recorded a decline in their bottom line. GSK posted turnover growth of 2.58, which is flat for me, from 20.6 billion to 21.3 billion. Then profit after tax dropped from 917.11 million to 622.23 million. That means it represents negative 32.15. But it should show that the dividend payout, this drop in earnings are also reflected on their payout. Dividend of 55 was paid in 2019. Now they are paying for 2020 40 kobo. What is your...
Actually, when I looked at that result, I realized that they have a lower investment income.
Okay.
which is as a result of the low interest rate during 2020. And so that is what actually dipped their performance for the better part of 2020. You see, they have about 71 million thereabouts against 200 and something million they made before. Okay. And so that is one of the, in fact, it's a major thing that dipped their performance for the year. So can we really pardon them for this? Because it's a general challenge. But again, when you look at others in the sector, they actually performed better. So I don't think we should pardon them.
No,
and I want to see the way investors will react to this morning.
Actually, you just said something that really touched me. Market will always treat you where you perform well. When you do poorly, market also flow. On this note now, looking at the numbers that came from that sector, it's done on investor to look at their investment objective and where they are going. If you're a dividend investor, when a stock that is selling for almost 7 naira is paying you 40 kobo, instead of selling around 4 naira is paying you 30 kobo, you make your decision. And also looking at the earnings that are monitored from this company, give you an insight whether you should hold your position or also sell. But for me, as you just mentioned, healthcare sector, for me in Nigeria, is one of the hot sectors all over the world because of what the investment in government in that sector, globally and locally, because of what the COVID-19. And only that, our government has realized that our tourists, health tourists will go to either China, will go to US, go to China, South Africa, England, London for treatment. It's not helping us. We need to look inward and invest in our healthcare so that the senators, the governors, the president can walk into any hospital around his corner and treat himself. But if we are looking at going abroad and also kind of investing there, because as we are going there to pay money, at the same time we are investing there, is it better we look inward? And also there's what came out from the governors forum about a month ago that because of this vaccine and I think the new that the general of the World Trade Organization, Dr. Ngozi, what I said that we should look inward and see that we can produce our own vaccine. That will go a long way to make this sector more active, because if you want to produce a vaccine, you're going to create employment for Nigerians, you're going to make the sector more active, and the government forum also give not to that let's look inward and produce our own vaccine. I think that will also make the sector more active. And at that time we also produce a better number. And the trend that this sector, the healthcare, from 2019 even to 2020, where we have has been an uptrend in terms of performance. That means a sector that we can be planning with, especially if you are income investor and also retiring, you are sure getting your consistent dividend from this company. But I always tell you that let your investment objective and what is happening in the market guide you. You don't invest and go and sleep. You invest and watch the trend in the market. Where you need to change your decision. But you don't invest and go and before you know, so that I'll move from 2 naira to almost 4 naira or 5 naira, on down to 1 naira, you are still holding it. So an investor needs to also watch the market and
like you have rightly said, do you know that policy direction can change?
Exactly.
Because again, the reason why government is focusing on them is dying down now. COVID vaccine is already around and things are changing. So what tells you that our government cannot say, let this go and rest tomorrow? So you should put your ears to the ground. Make sure you understand what is happening in the market so that you can play accordingly.
Yeah, just like you just said now. That's why an investor should not just do it. A long-term investor, don't just put your money one way and go and sleep. You need to look at what is happening, the news in the market, the policy change, and also the pattern in the market to know.
If you ask me, I think I'm more comfortable with the banking sector, because if you look at it, the regulation is very strong. So if anything is going to happen there, even if some investors are sleeping, they will still get something back.
Because of the sector
very strong. It's well regulated. And there's no way you can lose 100% as you speak. It's different from what we had before now.
No, that is where anywhere in the world, the financial sector or the banking sector is really where most people play because of volume and also activities. It's not that the tech industry is coming up in advanced country, but here in Nigeria, we always see that the high capital in the world is changing our market. But there is still a lot of potential in the market. As an investor, you don't need to panic, rather just to change your strategy and take advantage of the market correction. This is the first correction in the year after a bullish year in 2020. For me, it's expected. And also, if you look at the chart,
market already recovered.
The chart that was displayed on the screen, you saw that we have a strong rally in the last quarter of 2020. Now you try to see that long candlestick what we are seeing as a correction is still small. And I believe that once we see more first quarter results or numbers, that will also support the market if the earnings for the full year are given, and also the kind of dividend information that came during this week. By next week after this, I will see that will change also the market sentiment. And also, if you want to call on this program to join us to discuss, the number to call is on the screen. Feel free to call and contribute. And also ask your question, we'll address it. Any question in the capital market, you are free to ask us. Then we are going to the financial sector for the result. The masquerade, according to my friend, yesterday released the result. Access Bank. The masquerade released the result yesterday. The market has been looking onto that number, expecting that number to hit the market all these days. But yesterday, being the last the deadline to release results, most companies released their numbers, and that's why we saw rain of earnings and dividend news yesterday. And the Access, like I always tell you that this bank is going somewhere. If you look at Access, gross earnings for the period, it moved from 666 666.75 billion to 764.72 billion, meaning that they've grown their top line by 14.69%, meaning it just little point to meet our target. But if you look at other people, Bible 10 is enough.
Your approximate is already
15, and that is a good number for them. That means this bank, acquiring, expanding their capacity, is also reflecting on their top line. It tells you that they are eating to some people's market in the industry. What your stake? And not only that, the good thing that Access Bank has also crossed the 100 billion profit for the first time, moving from 94.06 billion to 106 billion in 2020. That means an uptrend of 12.71, which is good for me, but only that it didn't meet my standard and investment standard about 15% plus. But the EPS also was in the up direction from 2.65 to 2.98. Tells you that this is almost 3 naira, and they are paying a final dividend of 55 kobo against 40 kobo, bringing accumulated dividend for the year to around 8 naira. Don't forget that they paid their 25 kobo before now, and they are paying you 55. That is for almost 80 kobo for the period. For me, this is not a bad number, and it's not a bad
plan. If you ask me, Access Bank is a place to stay. Good. Because if you look at the trend of this bank, you see that they are actually challenging the ones we see at the top.
Yes.
If you look at their gross earnings, begin to compare to banks like GT,
you see that
they are already. Yeah. So I want to believe that with time, you see Access Bank doing better. And of course, like you said, investors will treat you the way you show yourself to them. And so as we go on, I see Access Bank selling at 20 naira, 30 naira.
Exactly.
But it's not going to happen immediately.
Exactly.
So I know that we are all after what we get, because they said it is what you eat that you will carry away. But again, if you stay in Access Bank, with time, you are going to smile, both in capital appreciation and dividend income. So it's a place to stay. This bank has come to perform wonders.
Yes, just like we say that anywhere in the world, the financial sector is the engine room of economic growth and development. And the sector, Access is very important. That's why stock like Zenith Bank, stock like GTB, stock like Access, stock like First Bank and Stanbic Capital, you see their performance. Because even when there was COVID, if we're sitting at home, because we are doing transaction online, but transferring using them, they're still making money. And technology has also better their business for them. For me, as an investor, I always tell people that comes to me, don't think that you can't do trading. Have 2 portfolio. One portfolio for long term. Advise those that come to my office for control. Because to do this, I want to advise you, have a long term portfolio and a short term portfolio. Just like my thing just said on this program that stock like Access is for trading fine, but if you're a long term investor, this is the kind of stock you should put your money and relax. But not just go and sleep. You know what is happening in the company. You look at their quarterly results, and now they are seeing improvement in their top line. It means that I said earlier, they are entering into other people's market, or they are expanding. And also, don't forget that it's a bank that has consistently acquired banks, swallow banks. You know what it means? That means your capacity is being expanded. For me, I see potential in Access, and that means now that it's selling below 10 naira, this is a store that will hit the 30 naira, either in 2 years, in 3 years, in 1 year. We can't just about. If a long-term investor, we are buying assets below 10 naira, you are sure making 200% return in the next 3 or 2 years. For me, if you're not an investor, this should be your what in your portfolio as an investor. Also, the next one there is FBN Holdings. Sorry, FBN Holdings. That means the former First Bank with their conglomerate companies coming together. They released an earning a growth of a negative 1.68.
Is it negative?
Negative. That's a negative
decline.
Yeah, it's a negative decline. Yeah, sorry. And the number moved from 590.39 billion to 579.4. You can see that there's a decline from 590 to a decline of 579, a decline of 1.8. And but their bottom line, which is the profit after tax, was up by 51.81%. It grew from 73.67 billion to 89.73 billion. On this note, what's your position on and also a dividend of 45 kobo against 38 kobo? You are as an analyst, what's your position?
The way I want to look
and also don't forget that this bank also reduced their non-performing loans drastically.
Yes.
We'll give it to them.
That's what I want to say, that if you look at where they are actually coming from, you give it to them. They are trying to recover.
Yes. Because
First Bank had it very rough. And things were actually rough. This First Bank that we always pay dividend, that we always give you bonus, and all of a sudden, everything. I think there was a time they paid 10 kobo.
Yeah.
So things went so rough. And if they can grow from that level to now be giving us 45 kobo, having reduced their non-performing loans so much, and building their profit line by 21.8%, I think we should give it to them. Although they have stayed long, and we think they should do better. This is a bank that you hardly see a single investor that doesn't have First Bank. Because I remember that then, if you ask, what should we buy? We recommend First Bank and then Union Bank. Exactly. Every investor, those are their first set of investment in the bank. And so if you see the pressure, even the price of First Bank is passing through, is that in a day, there are so many people that want to sell, that want to buy, because the volume, the shares is in the hands of almost all the investors. So I think we should give it to them. As what they have done, if they can maintain this trend, then First Bank is definitely going to recover all their lost glories.
Like you just said, personally, I really identify with the leaders in the industry in terms of profitability, in terms of what focus, in terms of where we are going. And we can see that the top performance in that sector has been Zenith Bank, GTB, Access, and the Stanbic. But as you just said, the life of Union Bank and First FBN Holding are just coming up again after they've experienced bad experience in the previous years. For me, it's good, but their payout is very low compared to the price. It's that is selling for almost 7 naira, 20 go pay me 45 kobo. For me, you said it's good from 35 kobo. I said that the payment is still low. Considering where this bank comes from, being an old bank in the industry, I think they should leave. And also, at the same time,
they should what?
They should leave. At the same time, you mentioned something that said that this bank is in the hands of every shareholder. And that is one thing investors should have in mind. And which, people identify with investors that will know. They will call shareholding structure. It's part of your decision making when you are investing in stock. The shareholding structure will support a price to go up or down. Now, for the share of First Bank to be a bit stable for the past 1 week or 2 weeks, around 7 naira, it has not gone below 7. That's why when the market was correcting, it has not gone below 7 naira. It tells you that something is changing there. One, when you look at the insiders, when I'm insiders, those are part of the management buying volume of First Bank as their own position. It tells you that they are seeing potential in the bank. For me, it's one of the things to work with. But when you are investing, you are looking at the shareholding structure. When you see that the shareholding structure of a company is weak, it also affects the price of that stock. That is why stock like Stanbic.
How do you justify being weak?
When it is in the hands of every big and very in the market, both small and big, when it is that means when the price go up, they want to dump it. That is what affected First Bank before now. It's just because the management are buying in now, not giving some outsider confidence to stick with First Bank. This First Bank, anytime the price go up, the way people sell it is not because it's bad. It's not bad news. It's because it's in the hands of many people. No graduate in Nigeria or no family in Nigeria that don't have First Bank as share.
As long as they are investors.
Yes, for me, that is why also look at the shareholding structure of a company. It's very important. IBTC sometimes is enjoying the high price today. It's not because of their performance of number, it's because of what their shareholding structure. Because when the foreign investors have about almost 68%, 65 to 68% of the company, the share is not available in the market. Like the few one I go, so what the price will go, right? As an investor, always look that way when you are making your investment decision because it's very, very important. Despite the holding structure of FGN holding, see, look at the result. For me, they are coming out, but let's also look for long term, as my colleague has said, long term. For traders, we watch, but for me, I will recommend for long term investor. When the market come up again, you can also consider. But now the next one there is Sterling Bank. Sterling Bank is also changing their business model. Now, I will tell you the good their own earnings, what's called gross earnings for the period. No, it's on the downside. It was a drop minus 7.52. It moved from 150.20 billion to 138.90 billion. A drop of 7.52% for the period. But also, like just like what happened in the first bank, their PAT was up from 10 billion to about 11 billion again, about 6% up, which is good. But also they good their dividend payers from 3 kobo to 5 kobo. That's about 66% growth. For me, it's a good one for Stanbic. But the good thing about Sterling Bank, the good thing is that the bank is having another model of banking. Which is good for investors. They are going to non-interest banking, just like what Jais is doing already now. That means that business model, is what we expect that it's going to also, impact positively on the bottom line of what of Sterling. If good morning. If Jais can sustain their business model till now, for me, Sterling Bank looking that way is also good, and I believe for investors to see this, second tier bank growing its dividend from 3 kobo to 5 kobo, it's not a bad one. But I will tell you that considering the price is selling, I don't hide my own. The price is 5 kobo is too small for the bank. But considering the year 2020 where we are coming from, we might give it to them. But for me, also because of the business model they are changing, I would say you can look if you're a long-term investor. And I will say that the financial sector remains the engine room of any economy. For that, activities will always be there. And also the volume in that sector has also helped investors to trade short-term on that sector. That's why liquidity in the market has always come from that sector. Apart from the high cap stocks that move once in a while. But for the banking stock, it's always been either up and down. You can trade with that kind of stock in that sector because anytime you want to sell any banking stock, they are liquid at all time. For me, banking stock is a stock to use for your trading portfolio as you plan long term with them. That means as an investor, I also said go have to portfolio. As many as 5 go have a go. Long-term portfolio and short-term portfolio. The last bank there to discuss today, we're looking at Jais Bank. Jais Bank also, this is a bank that also meets our own investor data criteria for good performance. The goal is the top line to which is the gross earning by 38.79%, and the bottom line, which is the profit after tax, with 18.85. It means that this company goal is gross earning by 13.53 billion to 18.76 billion, and the PAT was up by 2 billion to what 2.9 billion. That is good enough. And also, only that their earning per share was up by just about 18.5% because it moved from 0.08 to over to 10 kobo. And also, they paid the same 3 kobo they did in 2019 for 2020. What's your position? And also, this bank, I'll tell you, this bank has a need for itself. You agree with me? They have a niche. Yes. And that the service where that if I can see good number.
But you see what I want to establish in Jais Bank is what is the regulation status like? Because if you check Jais numbers, you see that they have negative retained earnings. Although I give it to them because last year they have 40 billion. 4 billion. And by the last result, they have 2 billion. That's a good adjustment. But again, the rule is that financial sector don't pay dividend when they have negative retained earnings. I don't know how they are managing to pay dividend, even despite. Although I believe that their business model it cannot be likened to that of Sterling, First Bank, and other of that financial institution because they don't charge interest, rather they share profits.
And also help you to manage your business.
Yes, they manage business.
But the good thing again is that when it comes to that, retail earnings being negative, like what you just said, I've observed it for like 2 or 3 years now. But the good thing is that you look at the shareholders fund, that is where the regulator
is positive.
The shareholders fund is positive.
Yes.
But the only bank in that sector to speak now, whether the regulators are having oversight on it or whether they are sleeping, I don't know. It's talk like Unity Bank. Unity Bank is having a negative shareholder for more than almost 200 billion. And it's a negative position for getting to 4 years now, and this bank is still operating. I pray that the investors should not wake up one morning and they say that bank has gone on again. Because it's the work of
it can't happen in Nigeria. The depositors will get their.
No, I say investor.
Okay, investor.
I'm not talking of
the business.
I'm not talking of investors. CBN and they're always there for them. That's why when any bank is nationalized, the fund of the depositors are always
protected.
Even with a lot of security there. But for shareholders, we're always at the mercy of the regulators. For me, that is the only sector, any bank in that sector that I know that is having a negative shareholder fund. And I believe that the regulator don't play with that shareholder fund. But now I don't know why they are waiting to spot that out from Unity Bank. Before now, any bank with negative shareholder fund, the regulators always go after them. That happened in Oceanic, other bank, and even what is the name of this bank? The Eastern Bank that was nationalized by CBN. What is the name of the bank? That turned to Polaris, Skybank.
Skybank.
Yeah. You can see that. For me, investors should also be very careful. Even though you are you are doing short term, you have to also look at what is happening in the market and get information on that. For me, for the outlook for the second half of the year, but for those that are really on the Investor Forum, we're already preparing for the master class that will usher into the second quarter, and we are giving you 10 hot stocks for you to invest in this quarter. And that is enough for you to be at the master class. If you are not registered, you are free to go online and register for the master class. We will review the hot sectors and the hot stock in that sector, so that you can make good money in this second quarter we are entering. But on that, I will also say that investors should not just go and sleep. The market is turning for another rally. I told you earlier in the previous program that this year we still close positive, but not as high as what we saw in 2020. Then it's your time now to know which sector will outperform the general market. That is where you should be. Now that we are seeing that price and consumption drive the economy and stock market. These are the two things. When there is consumption in the economy will do well. When there is no movement in price, people make money in equity. For that, you need to know how to position yourself. On that note, I will look forward to seeing you all on the master class. But today, we are still on this stock market, especially as we are crossing to the second. What is your outlook for second quarter?
Can I speak technically now?
Both technical and fundamental.
Now, if you watch the last correction, okay, you will realize that the recovery came before the last low. Okay. You understand? And that is technically a sign that the uptrend will continue. Okay. So we have seen a recovery less than 50% of the downtrend. Definitely, the market will move higher. Now, to confirm this point, we realize that as the market is going now, if it can go so high to the extent that it moves higher than the previous high before pulling back, then you are sure that the uptrend is finally confirmed that it will continue up. In other words, I am saying that my outlook for the second half is very positive because two things will happen now, at least to investors. Number one is that we are seeing the full year earnings. Several dividends are out. Most of those dividends, their closure date is June. Some get to April, July. I've seen those that are in June. Some that the payment date is even in July. And so the closure date, you see, people work towards those dates. Now, complementing this result, we'll start seeing first quarter results. So the market has a lot of reason to move up. And like we said earlier, the first quarter business environment was fair. And there was a little bit friendly that what we see in the last quarter of 2020. So if you ask me, I am saying that the second quarter is likely to close higher than what we saw in the first quarter, especially if there are fundamental news from the economic indices that will further back it up.
You are very, very correct. And also, like you just said, that means market has to feed on these earnings in the quarter that we're just entering now. Because first quarter will start from now. And from end of next week, start seeing early filers using their first quarter for the year. And that will be an eye-opener for those that really want to take their investment decision for the year. Because seeing a company full year result for 2020 and also looking at the first quarter, it should give you an insight to where you should put your money. And that is why this master class is coming up. We want to tell you where you should be for the year. For those that are thinking long and going to trade. And that is why you need to be there. And like I don't want to add to what you just said as regarding the second quarter. And also encourage the viewers to call, to ask any question or to add to what we are discussing on the program today. Like the second quarter of 2020, I see potential. One, it's only in the advanced country they said sell in May and come back in October. You mentioned something that is so important, that most of the companies that don't release their corporate action as May, June, and July as what markdown and payment day. That means any investor that takes position now will be looking at the world of capital appreciation and also looking for that dividend income. That means for me, it's going to be another week for the market in terms of market pulling back. And as you just said, if you look at the candlestick that was displayed on the program before now, that the long candlestick shows that yes, the last quarter of the year was sharp. And the correction, which I tell you what in the world, that capital market or stock market graph, even live graph, is never a straight graph. It will go up and down. The up and down in graph of life on the capital market is opportunity. That means when you go up and something comes down, it's for you to take advantage. That is why I say price and consumption is the key factor that you use to build wealth. If you want to build wealth, want to become a billionaire, you look at price and consumption. It will tell you where there is demand, what is event that's happening in any sector. It will guide you. Where there's consumption, there's about to be what sales. And when there's sales, there's about to be what gross, earning will be up, whatever. But when there's no consumption, you see that your numbers will be struggling. That's why, as a good investor who want to build wealth, you look at price and consumption at any time to know where to put your money. And that will go a long way to guide you, especially as you get into the second quarter of the year. Because they want to see the first quarter of this company for the first 3 months that ended 31st March yesterday, as from the second week of April. That also open your eyes to know what to do. But today, and also, I really want us to look back and look at, apart from the banking sector and the financial sector, we have not discussed their earnings. Which sector again in the market can you see that yes, what can just look the way of that sector and invest?
The building where we have Dangote Cement, WAPCO, the BUA, that place is also a place to look at because their business is actually looking up. You can see how much they are selling this cement now.
Oh, that's what I say, price and consumption.
So they are actually making the money now. Yeah. So definitely the returns will come back to investors. So it's also a sector to look at, although prices in those sectors are on the high side. But if you look at those stocks again, they are kind of defensive. They can hold your portfolio very well against any crash.
Hello. So, yeah, there's a caller. Sorry, I didn't call you. There's a caller online now. Yes, can we hear you? Can you speak up? You are welcome to the program. Hello, Port Harcourt. Hello, caller from Port Harcourt.
Port Harcourt.
Mr. Philip, can you speak up?
Yes, I'm speaking. I am Philip from Port Harcourt.
Yeah. Can you speak up? We're not hearing you.
I need analysis on GTV.
On what?
Analysis on guaranteed trust.
Guaranteed trust?
Yes.
Okay. All right. Okay. What are you looking at in guaranteed trust? All right. Guaranteed trust.
Guaranteed trust for me, like I told listeners or viewers on this program last week, that the guaranteed result was what really saved the market from the nervous UBA result sent to the market. It was the number that even reversed the trend. Yeah. When UBA released their number to the market, every investor will laugh us because
People begin to exceed banking stock.
the market stock because when they saw a dividend cost from almost 80 kobo to 35 kobo, they were panicking already. And those that now took earlier position in expectation of this number, they were confused. Should I sell now after I waited? No, should I hold? But when Guarantee came to the market with 270 kobo dividend, that changed the sentiment and the whole fear in the market gradually died down. And when Sabi came around again, WAPCO came out with a 1 naira dividend, then there was market lifted out, and that also supported the market. But looking at the number of GTB, which I discussed last week, if you look at the top line of GTB at the bottom line, they have just a marginal growth. Also, it reflects the economic situation, knowing that the banking sector is the end of the economy. That means when the economy is sick, it will affect the banking sector. But our banks management and also their risk level are sure that they are resilient, and that has reflected on the numbers of all the banking sector. Despite the marginal increase in the not performing loan from the sector for the year 2020, which I know as the economy recover in this new year 2021, new financial year, we expect that the non performing loan will also gradually drop with things improving. For me, GTB is a bank that you should hold if you are there. Also, don't forget that GTB is already opting out from this one to a holding company, and that's also going to support them because the holding company, the idea is that they want to do other business. When I discussed with few of the staff and also most of the management in that GTB, they said they are going to other business that will support their bottom line. And you know that instead of fintech, GTP is there, and they want that fintech to support their bottom line. We don't know what to do at speaking about. They have their business model already. For me, if you are in GTP for long term, you can hold your position, go into the future that their numbers will start coming, and we'll see a better number compared to what we saw in 2020 as well. During their full year, that will support the price. But for me, in terms of dividend, you are sure that this bank, GTP, Zenith Bank, will give you dividend that will also use.
Then again, I think we need to the qualification date for the dividend was yesterday, so it will be adjusted today. But again, GT has always performed a magic. He has a trend. When it is backdrop, it has always closed above the markup price. Markdown price. So every year. So let's see what happened today at the end of trade, because it's going to be adjusted for 2 naira 70 kobo. Can it gain 2 naira 70?
No, the trend is that it might not cover the whole 2 naira 70 kobo, but expect that it will recover 1 naira 50 kobo or 2 naira at a time. But I think it's about 2 years ago,
more than 3 years he has done that.
Yes, he has recovered most of the board. But in other words, it was half. For me, I see GTB as a bank to hold. But in terms of profitability, we'll look at Zenith Bank that lead the sector. But in terms of price, we see GTB as leader in that sector. But in terms of performance profitability, Zenith remain number one. But for me, these two stocks should be in your portfolio, especially if you are thinking long and short. That is the way it should go. And for me, investors should not panic at this point. Rather, you should take advantage of the market cooling down, and that also will give you a better return going into the year. On that note, we'll be planning up the program, and we look forward to see you on Thursday next week by God's grace. Here with me, Mr. Janabu. We say goodbye to you. Thank you, and God bless you.
God bless you.